Well, the early success of Kava potentially showing the IP market could be coming back to life. Our next guest says it takes more than a listing day pop to instill confidence in the market. Let's welcome in Seth Rubin, Stifel head of equity capital markets. Seth, I was looking through the numbers for Q2, 23 IPOs raising a combined $6.6 billion. That's a pickup from where we were the previous quarter, the year before. Can we continue this momentum going into the second half of the year?
Yeah, thanks. I do think so. I think there's good reason to see some enthusiasm, and there's good reason for some optimism of the market. As you said, Q2 was actually the best quarter we've had in the IPO market since the last quarter of 2021. I think you have to take a step back and remember that in the last quarter of 2021, we had free money. We had a growth at all cost environment where people were willing to just continue to plow into money losing companies to show some growth that was beating the market, and we had peak valuations. And so none of those things exist anymore, and we've started to see some return to investor appetite for buying the new issue market, and in particular IPOs. But I think as your last host said, we're a long way from normal. We're still very much in a rebuilding mode, and we've got to make sure that the deals are set up to succeed.
Seth, in terms of what investors are favoring in this environment, given the fact that there is so much uncertainty, and we certainly have seen an uneven sort of, a huge gap in terms of the first or couple week performance that we have seen of these companies that recently went public. When you take into account Kodiak Gas Services, what that looked like to what we saw with Kava, a very different picture. What are investors favoring in this environment?
Yeah, look, I think it's hard to just look over the last couple of deals or even the last couple of quarters and say that's the trend, right? Because there have been so few deals that investors are still trying to get their heads around what are these trends and how do we think about pricing and what's the right entry point for companies. But we spend a lot of time with the buy side. And I think what you'll hear is pretty consistent, which is they want companies that are at scale. They want companies that have profitable unit economics, so they see a real pathway to profit, to driving profits and to driving earnings. They want growth, and they want real visibility in the market. And they want to be able to get all that at a reasonable valuation, right? So I think you put those things together, and what it's going to say is you can find pockets of that within every sector right now if you can find the right companies and you can get them out at the right time.
If that's the case, how do you explain the kind of pop that we see in Kava? That's not a profitable company.
Yeah. So I think the things that were attractive about Kava, and I don't really want to talk about any specific companies, were really the growth in the unit economics, and that investors really believe that with an execution story there, you're driving to profitability and you're outgrowing the market. And within consumer, I think if you can come to the market with something that has real scarcity value and can become a market leader, there is a desire to own that, right? There's supply demand economics, and people want to own that. I think if you look across other sectors, you'd say if you went back this year, it's not the sexiest, sectors that we typically think about, right? There were a number of deals in insurance, specialty insurance. You said energy, oil and gas, some of the other sectors that when you see some of the high flying companies, you don't pay as much attention to. I think we're in the process now of testing the market. When can we bring back companies that can get paid on a forward growth multiple? And how far in advance are people willing to lean into that? And so I think we're going to see strength in technology with the AI and the super cycles that are driving sort of new innovation coming to the market. I think we're going to see it in biotech, where the science is improving at rates that we've never seen before, and the crossover investors are really driving some additional capital into that market. And I think we're going to continue to see it in consumer. But again, this is not a one sector fits all. This is really a company by company analysis, I think, for a period of time.
Well, Seth, what do you think is necessary for the IPO market then to fully open?
Yeah. So I think it's going to take some time. I think it's going to be, frankly, cohort by cohort, where you see deals succeed over not just the first day. I mean, first day pop, of course, is important. It gets a lot of media attention and focus, and deals have to work, right? They can't break down right away. But I think what investors are looking for is this sustainable? Are you 1 quarter, 2 quarter out? Are companies meeting and beating the expectations that they set with the buy side at the beginning? I think slowly that's going to give investors confidence that they can start to be involved in more transactions. Right now, people want to invest where they have a relationship with management, they've spent time, they've done the work, and so they're going to be very selective for a period of time. So my personal view is why we will absolutely have some IPO activity in the back half of the year. I think it'll be more than the first half of the year. It'll be more than 2022. It's going to take us another couple of quarters to really rebuild the IPO pipeline to what has been more sustainable historically.
Seth, what about SPACs? I mean, are we going to continue to see companies still utilize that as a potential tool to come to markets? Maybe not at the level that we saw several years ago, or you think that given how companies that have come to market through blank check companies have performed, that's kind of behind us?
Yeah, I think we're going to see, obviously we won't see the same activity that we saw in 2020, 2021, even the beginning of 2022. I think, frankly, as the IPO market picks up and as you see more capital going in the market, you'll start to see more SPAC exits as well. So I think if you go back to what a SPAC was really made for, which was the ability to bring a company public that maybe had some story behind it or something that was different from a regular way IPO, but that company still was ready to be a public company. So I think to get SPAC deals done today, and they absolutely will get done, and we've been very active in the market, it will be with companies that really are ready to be public companies, right? They've been performing like a public company. They have scale. They have real governance. They've got the ability to provide investors and research analysts visibility, and they can perform over time. So those things are going to bring deals back to the SPAC market as well. But again, just like the IPO market, it is not going to be any size fits all, and it's not going to be a market where we say we'll pay for growth in perpetuity without the ability to drive unit economics.
It'll be interesting to see how things pick up in the second half of the year. Seth, good to talk to you today. Seth Rubin, Stifel, head of equity capital markets.